Welcome to another tutorial on using the My Property app to analyze a property investment. What I've got here is a quick example deal of a deal that I've been running. So this is the asking price of 2.4 million with an offer price of 1.9. The total net annual rental income would be 88,000. The projected ROI would be 18%. Now, essentially what this app allows you to do is to run from stage 1, which is area analysis, through to stage 7, inputting all the different relevant figures to determine if this deal makes financial sense or not. And what you can see here is that the return on investment, 18%, that is in our minds a great investment opportunity, and if you've inputted the numbers correctly, that is a good sign. Now, one of the things we've included is a scenarios tab here on the top. Now, if you go into the scenarios tab, this is essentially where we stress test the deal, because the reality is not everything is going to work exactly as we expect. The bond interest rate is not going to stay the same for the next 20 years. The renovation budget that you had anticipated might be a lot more, or it might be a lot less than it actually turns out to be. So why we've brought the scenarios tab or the stress testing tab into the application is to allow you, the user, to see where the high risk levels of your deal is. So for instance, what you can see here is the bond interest rate for this specific deal. Now, at its original bond interest rate, it's going to give an 18% return. That makes sense. Now, if the bond interest rate goes to 11%, right, which is slightly higher than what we originally bargained for, the return dips down to 15.57%. If the interest rate spikes up to 11.5, the return on investment now goes down to 14.3%. So you can see that as the interest rate increases, our return decreases. That makes sense, because as you increase your bond interest, that increases your monthly expense, that decreases your cash flow, which then decreases your return on investment. And then what you can see here is if your interest rate had to drop to 9.5%, your return would actually go up 19%. Again, that makes sense. Lowering the bond interest rate would lower the monthly bond, which would increase the cash flow and thus increase the return on investment. Now, why we've colored it yellow, we call it the impact factor. Anything that is yellow or green or blue means it's got a low impact, okay? Meaning that it can change quite substantially, but it won't have such an enormous effect on the deal. You can see here that between a 9.5% interest rate and 11.5 interest rate, there's a small difference in the return on investment. It's got a low impact. If we go down here to rental income, now you can see rental income is red, which means it's a high impact variable. Now, at the rental income, as it originally stands, 18% is the return. But if our rental income is 10% less than we anticipated, the return now drops to 11%. If the rental income is 20% or less, it now drops to 4%. It's almost a break-even deal. So that's telling me, that's immediately an indicator to say, I need to make sure that my rental income is accurate. I need to go and pull a Lightstone report, a TPN report. I need to speak to 2 or 3 independent estate agents. I need to see the rent rolls and financials. I need to prove that the rental income will be whatever it is, because this is telling me that the rental income is a high risk part of this deal. If we go on to the other side, you can see here that if the rental income was 10% more than we expected, the return is 24%. And if it's 20% more than we expect, your return shoots up. So you can see the difference between your variable here on the left of 31% to the right is 4%. You can see there's a massive difference, and that's the impact factor. That's telling you, and that's why we've colored it red to say, watch out here. If this number is not correct, it could severely impact your deal. Now, purchase price, exactly the same situation here. Refurbishments. Now, what you can see here is that even if your refurbishments go up 20% or go down 20%, it's not really going to have an impact. There's not much of a change in the return on investment. Vacancy rate as well. The impact factor is only 3%. So the difference between your top rated return versus your low rated return is only 3.1%. 3.51. Maintenance is also a low impact factor. So immediately from analyzing this deal, I would ignore any maintenance or vacancy. I wouldn't really put too much time into that. Obviously, you still want to use your TPN reports. You still want to view the property and see the condition of the property, determine what the maintenance budget would be. But the key things that I would look at here if I wanted to feel confident about this deal is, number one, confirm that the rental income is what it is, and make sure that I can maintain that, because that's obviously got a massive impact on the deal. And then also the purchase price. If you can get the purchase price at maybe 20% less, you can see that other side. If you get it at 20% less, your return on investment shoots up. So again, that's just telling you that there's a great opportunity for you to massively increase your return by lowering your purchase price.
Thank you for watching another video on your step to financial freedom. Now, if you enjoyed this content and you're looking at what your next steps would be, well, firstly, go and look at my property investment coaching package. You can find that on lawrencebull.com/coaching. I've put the URL there. It'll explain what the coaching package entails. Alternatively, please go and get a copy of my book. You can get it at any exclusive books, or you can follow that incredibly long link, which is lawrencebull.com/product/financial-through-property. Finally, go get yourself registered with mypropertyapp.online, which is the app that I use every day to analyze deals. It basically is a set of inputs that you put in, and then it'll calculate your return on investment, your exit strategy, your 20-year cash flow projections, your return on equity, everything that you need to know. Until next time, happy investing.